Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Friday, February the 7th. Well, a rather quiet trade overnight has turned decisively lower here in the past hour or so. Corn right now is down about 3 to 4 cents after failing to trade above yesterday's high. Wheat prices also given back about 3 to 4 cents from yesterday's price surge. The soybean complex lower across the board, down 7 to 8 in the beans. Meal is down about $3, while bean oil is just steady, perhaps drawing a little bit of support from palm oil, which was up 2% in the overnight trade. Speculative traders, there were large buyers in the wheat yesterday with just over 8,000 contracts in Chicago. However, open interest in Chicago was only down 1,000 contracts, suggesting it wasn't just a short covering bounce. There was some fresh long money being added to the market as well. Prices did jump out to a 3-month high. Kansas City open interest actually saw that increase about 1,000 contracts. In Argentina, despite recent rains, the Buenos Aires Grain Exchange did report lower crop ratings yesterday afternoon. In soybeans, they fell 3% to 17% good to excellent, while 32% of the crop was rated 4. That was up from 28% last week. And in corn, 25% of the crop is rated good to excellent, down 3%, while the percentage of the crop rated poor, that jumped 4% to 26%. Across the board, nearby spreads, they've widened here as today is the first day of the Goldman roll. Recall the CFTC has been reporting a surge in index funds long positions in recent months, obviously meaning that's more for that asset classes to roll ahead of the first notice day. No new headlines here overnight on tariffs. Yesterday's U.S. Trade Representative nominee Greer, while testifying before the Senate Finance Committee, stated that if confirmed, he would review the Phase 1 trade agreement with China from back in 2020 to ensure that they become compliant before considering rolling back any tariffs or negotiating any new trade deals. So I think any near-term hope of a new trade deal with China is just continues to fade. Crop conditions or weather seems to be improving in Brazil. Recent rains in the deep south and Rio Grande do Sul have brought some relief from the recent heat and dryness, while showers across the east, central, and central south region are expected to become less frequent, which would enable soybean harvest and second corn plantings to accelerate after a very slow start. Next Tuesday, the USDA WASDE report is not expected to show significant changes to the U.S. balance sheets. Historically, there is a bias for lower stocks, particularly for corn. In the past 15 years, since 2010, corn stocks have fallen 10 times, have increased only 3 times, while unchanged twice. Inside trade for March corn overnight as rally attempts just continue to fall just short of the $5 level. I would expect to see another surge in speculative length in the corn market when this afternoon's CFTC Commitment of Traders report, which I do think makes us a little bit vulnerable to a correction, particularly if Brazilian corn plantings accelerate. I do look for good support down in the 470 range. March beans, they once again challenging the 1050 level. If violated, I think we could see a quick retest of the 100-day moving average below the market at 1023.5. Meal, that is testing its 50-day moving average at 302.30, despite yesterday's strong export report, which was the highest in 2.5 years. And wheat is just giving back a little bit of yesterday's rally. The wheat-corn spread has rebounded over 40 cents from last month's low as the discrepancy in fund holdings hit a record wide level, with the fund short 111,000 wheat and long over 350,000 corn. A cooler outlook in the U.S. Southern Plains and the Black Sea region, I think, also contributed to yesterday's price surge. Thanks for listening, everyone. Have a great Friday.